Consult an advisor or conduct your own due diligence when making financial decisions. General principles discussed during this program do not constitute personal advice. This program is furnished by Dentist Advisors, a registered investment advisor.
Welcome to the Dennis Money Show, where we help Dennis make smart financial decisions. I am Matt, and I am so happy to be joined here by Hot Take Jake.
What's up?
And yet to have a nickname, but the wonderful, brilliant Christine Ewan. Hello, everyone.
Hey, guys.
Welcome.
Good to be here.
It's always fun. This is a fun dream team, and this is a fun topic we're going to talk about today. We call Jake Hot Take Jake because clearly he's got hot takes, and he's already started throwing out some hot takes before we even jumped in here. So I'm excited to hear this. We're bringing together we're going to talk about the intersection of movies, entertainment, and financial topics.
That sounds lovely.
Like only we can.
Only we can. So Oscars are coming up. I'm not sure when,
They are.
but the team told me that they're coming up. I have a first hot take confession. I could not care less.
Yeah, I think that's most people. I think
Okay.
90% of America could not care less.
So why not talk about it? We couldn't care less, but we're going to talk about it. It's still going to be
I'm
the
all about the
catalyst.
fashion and seeing everybody at the party.
March
There's-
15th is the Oscars. For anyone who is wondering, it's March 15th.
Okay, March
It's always on a
15th.
Sunday. I am part of the 10% of people that actually cares and watches.
This
funnily
is why
enough.
you're here. This is
Yeah.
exactly
Jake.
why you're here, Jake, because you do care. I don't know many people who are more into movies. And truly, all jokes aside, I love discussing movies with you. Like our whole team, we all have these conversations. Because I think, again, you are kind of like a pseudo critic. Like you really get into these movies and have like different takes on them. So it's what we love about it. So today we thought it would be kind of fun with the Oscars coming up. Jake's the only one that cares.
Yeah.
I could not. I think it's literally probably like reality TV and Oscars are like fighting for that lowest spot of things I could care less about. I could not care less about these things. However, I do care about these topics we're going to talk about today. And we thought it'd be kind of fun to, again, with the Oscars coming up, do kind of a Rotten Tomatoes of financial topics discussion. Jake, you want to share the first thing you said about Rotten Tomatoes as we got into this?
Yeah, it's funny. I think Rotten Tomatoes is like the most trusted when people look up a movie. I think Rotten Tomatoes is the first thing that pops up on Google.
They've done a
right,
great
people?
job of branding, yeah.
Yes, they've done a really good job. It's come on. The reason, like, I would just say, I don't like to pay attention to the Rotten Tomato score for movies. We don't need to get into the whole backstory and things, but you can become a Rotten Tomato critic fairly easily. I think that's what people, it's like, you can kind of apply for a process to become a Rotten Tomatoes critic if you write a couple of reviews for movies, types of things. There are thousands of people within the program. So essentially, it's just like, it's other people's opinions on a movie, which I guess are good to take into account. But I don't think it's like some ironclad, like if it's an awesome Rotten Tomato score, it's an awesome movie, it's a bad one. I've had plenty of experiences where it's been a bad score and I love the movie.
Yeah.
And great scores, and I did not love the movie.
I want to get your take on this really quick, both of you. Christine, have you ever used Rotten Tomatoes?
It pops up. I guess I've never let it be a decision for me. I've agreed with it and disagreed with it after having watched a movie.
Yeah.
And then seen. So I'm with Jake. I'm like, it's about 50-50 hit or miss for me. If it's aligned with me and my style, which might say something about my style of what I enjoy in movies, which is, probably unique to me. But
so let's break this down a little bit, because anyone who's listening who doesn't know what Rotten Tomatoes is, I'd imagine most people listening know somewhat familiar. To your point, Jake, it is a way to review movies. There's two scores on Rotten Tomatoes. There's the tomato meter, and then there's the popcorn meter. The tomato meter is the critics, as Jake has highlighted. Barrier to entry there is probably not as high as we would want it.
Yeah, define critic.
Yeah, define critic. And then the popcorn meter is just the audience score. So people just going in there and, getting on just like they would Goodreads or, any other rating system and rating the movie. Here's what I'll say. I actually tend to follow the popcorn meter. Like if the audience generally liked it, I'm like, oh, I'll go see that movie if it's over a certain amount. I give zero credit to the tomato meter. Zero. I don't really care. So,
and there's a divergence there sometimes, right? This is as I've gone more into movies. There's kind of the movies that are the more artsy fartsy, right, type of things, which is why the Oscars tends to appreciate those movies, which is why a lot of people don't care, because it's like these are some artistic movies that I haven't really heard of. They played in a few theaters. I don't even know how to watch these films compared to like your Jurassic Park, right, Dominion or whatever.
Amazing movie, by the way.
Yeah, which talk about popcorn meter. Yeah, anything Jurassic Park. But would you guess that the Oscars are aligned with the tomato meter? Then maybe would you say that those kind of
more
align?
more so than the audience? Probably.
As we're linking that back into Oscars coming up. We should try that. See what the scores are compared to what the tomato meter said to the Oscar winners.
We should.
Stay tuned. Part 2.
I'll rely on Jake for that because I will not be watching the Oscars at all. Okay. So with that said, 2 different scores. We thought we would do the same thing, rapid fire, with as many financial topics as we could come up with. And maybe more will come as we start talking through this kind of stuff. But we want to kind of give, again, 2 scores. And we're guessing a little bit, but just from our experience, what is our score as advisors on this topic versus what we think the dentist would score this. So I will give an example, and we'll just get started here. So the topic of the ultimate boring artsy fartsy equivalent of a movie that would win Oscars that the audience wouldn't care about is getting organized and tracking progress on a regular basis. That's the topic. What would be a score? Let's start with Jake on that topic. What would you score that from an advisor's perspective?
I would score this 150% if I could, but let's just do 100% as my top. Like, this is as high as they get for me. I think being organized and tracking progress is like the baseline of everything that you do in financial planning. It's the whole going back to you can't know where you're going or where you need to go if you don't know where you're currently at. As high as it comes. Huge fan. I think I will speak for dentist advisors as a whole. We are big on organization and tracking.
Yeah. Could not agree more. Christine, you have thoughts on this from a practice strategist perspective?
Yeah, I'm with him at the 150%. This is exactly what he just said, right? If you don't know where you're at, you don't know where you're starting from to where you even want to go. And how do you know if you're on the right track? So 100% all on board.
And then the question is, where do we, so I agree 100%. This is like foundational. We've said this before, the equivalent of like eat your vegetables of the ultimate eat your vegetables topic, which is financial planning. But because it's so obvious, I know I need to sleep more. I know I need to exercise. I know I need to eat my vegetables. This is the ultimate like boring of boring topics. It is so realistic or so real of like, you got to get organized. You have to know your numbers, both in the practice and in life, and track your progress. We all are on the same page. I knew this is why I started with this. Easy scoring here. What do you guys think dentists would score this as far as level of importance or value in their life? Any thoughts?
Oh, yeah. Avoid it like the plague comes to mind. Please don't make me. What do that? So again, a score is, no, I don't want to anything but.
So you're saying like a 10%?
Negative 10%.
Negative %.
We're going outside
in
even
terms
the Rotten
of
Tomatoes
joy.
scores,
I mean, in terms of the important, they just, whether it's true or not, or accurate or not, that is the emotional response I get whenever I talk about, let's start tracking things.
Yeah.
So.
Yeah. Jake, what about you?
I agree. The first thing that came to my mind was 10%. What's interesting, Chris, is from my experience, I think doctors know more about their practice cash flow and kind of budgeting, what their collections are and their kind of net income number is than even their personal side of things. I don't know if that's true across everybody, but in my experience, I just get a sense people are more in tune to the practice and maybe what's going on personal finance wise. I'm talking about like knowing how much they spend, which pretty much every doctor I talk to does not know their personal spending amount. So that's going into my 10% declaration there, is because people just don't know what their spending is. They don't know what their retirement number is. A lot of them do not know what their net worth is. They just don't really have a sense of where they stand on the personal finance side. But usually when I ask them, like, what is your collections? They know that. What's your overhead? They know that type of thing there. Does that ring true to either of you?
I'm going to get Chris in here, but I would say I'm with you. If there's one or the other, more likely.
They're not great at either.
They're not great at either, but I'd say they're more in tune with the practice because they're just more like a practice owner is going to be, at least by default, more exposed to those things
Yeah,
than they
it's more
would. Where you
pressing
got
and
to force
day-to-day.
it on the personal side. One thing I will say, I think most dentists, if you asked them, walked up to them on the street or at an event or something, you said, "What are your collections?" I think most dentists know within a pretty close range of what that is. If I said, "Now, what do you make in income?" I'd say 1 out of 10 actually know what that is, like their actual take-home pay. But let's get Chris in here.
Not even take-home pay, their revenue from the practice, meaning what's at the bottom of my P&L? What is my net income
your
say?
net income.
Which again is very different than what's actually going into my personal spending account, much less than how much of that am I spending and where.
Yep.
So I think because it feeds everything else, they're probably more likely to know their bottom line or their business than they are the bottom line of their personal spending.
Yep. I think that's probably true. Okay, that was our example. I have a feeling we're not going to get through all these topics. We'll see. We have a lot. Rapid fire here.
Okay.
I added one to the top here because obviously we want to take advantage of having the expertise of Chris here. So expanding to multiple locations. So adding locations. What would a score? Let's start with Christine. What score would you give this in general? Obviously, this is general, but what score would you give this?
Well, I will say this is becoming a bigger topic than it has in the past. So I'm going to give it a 65%.
So from your perspective,
it's more on their mind than ever. It's more than half the time they're thinking about that, more so than ever.
So so let me just clarify.
Popular.
What is your score of that being something that a dentist should be thinking about? Like your personal score.
Should be or is?
Should be.
Oh, well, that's about an 85.
You're saying higher.
Higher. Yeah, I think it should be higher. This is a great opportunity right now in our industry to think about expansion, whether that's multiple locations, adding providers, adding time, all of that. This is a great way to compete against the big corporate groups that are out there. I think this is something that's becoming more popular as a topic and should continue. I'm strongly in favor of growth as a defensive strategy, which turns into offense. And if we know anything, defense wins the game.
Yeah. We learned that recently in the Super Bowl.
To tie that into the recent,
go Seahawks. Jake, I think you might have a differing opinion on this.
I hate this. I don't really want to disagree with Chris because she will prove me wrong, right? If I do that. My first reaction of what I think was probably around 50%. I kind of wanted to walk the line of this can make sense for you. That was kind of my answer, non-answer. Is this can make sense for you? Maybe it doesn't. So I was going to say 50%. I'm actually less favorable towards adding multiple locations, just in my experience, than maybe Chris is. But I think that's okay.
Yeah, I would again from a expertise and experience standpoint. Just so people don't know, if this is your first time listening, Christine has forgotten more about this topic than Jake and I will ever know.
Yes. Yeah.
And so just to give some context there. But I'm with, so my first reaction was somewhere down the middle as well, Jake, of saying, and I think it's more anecdotal. I think the key nuance here is just being intentional with it. I think sometimes, I think a lot of times we've seen, and maybe the stories that we're looking back on, Jake, would be dentists who do it just to do it because they think they're supposed to do it. And they've given no thought to the big picture of what does this actually mean for my life? They haven't put that time and effort and work into yet. So I think done intentionally, I think I'd favor more what Chris is saying, but the caveat just being, we've seen some of these situations go bad. We've
seen a lot of these situations go bad. Let's not downplay that. But when done well, with intention, with a strategy, with enough time and cash flow, and understanding what it's going to take in time, energy, and money to do this, it can be a great growth model.
Yeah, for
more
sure.
So. And again, I'm more in favor of keeping that private than I am thinking about selling as I need to do something else. Selling versus keeping this, growing your own asset, adding to your asset class with another location, possible real estate, all of that is just, that's my happy place.
Yeah. Well, and I think maybe this comes back to, in all our conversations about this kind of thing, like internally and externally, I think maybe what we're talking about is we're talking about intention, but I think another part that where we see this go wrong is sequencing. So messing up the order of things. It's kind of like right decision, wrong time. And I think dentists, Jake, tell me if I'm wrong. I think this is what you and I are getting to when we see this, is where dentists say, I'm bursting at the seams, or I have X, Y, or Z problem with whatever. Hygiene's booked out, whatever, 6 months or whatever. So I must need to get another location, or I must need to expand. And this is what the beauty of having Chris on our team is, we go to her and say, hey, here's the situation. Oftentimes, Christine, you say, well, there's some sequencing here. We need to look into over here instead before we just immediately go buy a $2 million building and go expand our practice. So
yeah.
Optimizing location one has to come first.
Or
you can't, if your systems aren't in place with the first one, why is it going to be better with the second one?
Yeah.
I appreciate that perspective.
And anecdotal experience, I just don't know if this second location is really offering what the doctor thinks it's going to offer. Or I think they want to expand where it's like, hey, I want to increase my practice. I want to increase my income. Fortunately, being a dentist, you make the most money chairside, right? Kind of the production that you do. For any associate-led production, like if you're opening up a second location and having different providers in there, or the margins on that production and collection is far smaller that you personally are collecting, right? For example, let's say you can get to a 10% profit margin for a second location, which is pretty good. So that location needs to be doing $1 million in collections for you to take home that extra $100,000, right? That you're wanting. Whereas if you just wanted to work a little bit more chairside, you can do, $400,000 or so, right? In your own dentistry to make home that, say, $100,000. And so I just wonder if I'm using broad numbers here, just very general numbers, but is an extra $100,000 that you're getting pre-tax worth the stress and the headache and all the things that can go wrong with a second location? And also acknowledging that doing a second location may not work because you can't replicate yourself. If your one location is awesome, oftentimes it's because you're just an awesome doctor and you can't copy yourself, unfortunately. And finding the right associate and getting the right people and expanding your team is always hard. We always hear about staffing issues. And so it's just a lot of work and stress and things added to your life. And I don't know if the cost benefit analysis always aligns with what people are thinking, would be my
and you're going back to their why. Why are we doing this, right?
Yeah.
And that's such a key point of everything that we advise on here, from where are you investing to, and if this is another investment, do you know what you're investing in time, energy, and money? So why are they doing this? And is it satisfying something that is worth pursuing? Then again, it goes back to doing it the right way.
Yeah. Love it. These are big topics. We're going to keep the train. We're going to keep the train moving with a big topic, kind of along those same lines. Selling to a DSO. Selling to a DSO. Jake, let's get your score and then what we think the dentist score would be. What's the tomato meter? The advisometer.
I guess I'll take a stance here. 25% selling to a DSO, just in general. We're not super big fans over here at Dentist Advisors, while acknowledging that there are a lot of cases where it can make a lot of sense depending on your practice size and career stage and where you're at. But in general, I'll go 25%, my personal opinion there.
And then what would you say the dentometer would be? I'm making this up as I go. The dentometer and the advisometer.
75%?
Yeah.
Does that sound accurate to you guys? I think most dentists are at least interested in it. And whenever you offer somebody, the biggest thing with the DSO and a lot of reason for selling to a DSO is they are showing you those big numbers for your practice, your sell price, right? And it's hard to look at those multiples and those dollar signs and say, no, I'm not interested in that. I think a lot of people are interested because they built this practice, blood, sweat, and tears into it. They want to get the most out of it as possible. And so, so a big DSO offer, I think, is interesting for most dentists.
Yeah. I think that number has probably come down a little bit over the last couple of years for the dentometer. But Chris, what are your thoughts on this?
Well, that was what my thought was. That it used to be, from the dentist side, 80% are like, oh my gosh, it's the hottest thing right now. And then their whole FOMO of, I want to know what that's like and I don't want to miss this, and the consolidation wave and all of that, where I think it has slowed down in the last definitely 18 months for sure, with the macroeconomics that are happening and questioning what's going on in the all around market, all of that. And I think it's also still on dentists' mind. So is it still good to get an offer? You're going to feel good about that. That's great. Take that as a win. So I'm still at the 50-50 point that dentists are seeing this as something I should still pay attention to. Now, again, on the advisor meter, it is definitely something you need to pay attention to, because if you've seen one offer, you've seen one offer. And you need to really look at, and there's a podcast we've done before where the three of us went through and looked at an offer in particular and went, not so much. So the answer of it depends, is it right for you? Again, it's back to the why. Why are you thinking about this now? It's a great idea if you're close to retirement to pay attention, or if you're physically looking, from a disability. Sometimes that's what's causing some of these exits. So I think it's on their mind about half of the time for sure.
Yeah.
And it's still, again, I want to do the pro formas. If you kept your asset now, kept the cash over the same time period, what is the difference? And sometimes it's not all.
This is a big thing. Yeah, like these DSOs are not running a charity, right? I think this is an important point to bring up. Like they're paying you a lot for the equity in your business and in your practice because it's worth a lot. Right, they are not losing on this transaction here over time.
So feel great that the offer's there. What a great compliment! Yay,
yeah. But it's one of those things where make sure like the equity that you've built up in your practice is valuable, and that's the reason that they want it. And so make sure that whenever you're parting with that equity, make sure you understand all of the strings that are attached and all of the nuances of it, because it is valuable.
Yeah, I mean, I don't agree or disagree with anything. I don't agree. I don't disagree with anything you guys are saying. We all are on the same page here. I would have actually given it a little bit of a lower score, Jake, personally, for the advisometer, probably 18%.
Love it.
But we're going to get super precise here.
Like an advisor.
False precision, exactly. But somewhere in that range as far as what we see these deals actually work out. We have a pretty strong belief here at Dennis Advisors that private practice ownership is the key to freedom, key to financial freedom and fulfillment with your money and career, and maintaining that asset a lot longer than you think. And I think dentists are actually, I would have said it today, and this is probably selection bias with a dentist that we talk to in our community. I would have said like 60 to 65% at this point. I'm talking to a lot of dentists now that are pretty negative on that route. I
getting far less questions about it for sure than a couple of years ago.
Far less for sure. So it'll be interesting to see where this year goes and beyond, as private equity adapts and DSOs adapt to the changing landscape here. Go ahead, Chris.
Their growth model right now is all about same store growth. If we're looking at what the bigger group, DSO, private equity bank, they're looking at creating profit per location rather than from mergers and acquisitions.
Yeah.
So that means each office could do better. So as a private practicing dentist, the same thing they're focusing on is exactly what you should stay focused on: increasing the cash flow and profitability within your own 4 walls, or 8 walls if you've got 2 locations. But that's what it comes down to: managing your own private practice more efficiently.
Well, this paradox that's created by this single success of your location is, yes, you become more valuable to a DSO for sure, but it becomes more difficult to make the case as to why you'd give up that asset. Like if you are like, that's the problem, is you become this highly profitable, efficient, systems driven practice. And like, yes, every DSO is knocking down your door to get it. But it's like, as advisors, we're sitting here being like, what are you doing? Now you're reaping the benefits. You're finally being able to harvest.
15 years to get to this point.
15 years, exactly.
Congrats.
Congratulations. Keep your asset. Keep your asset. It's like the key to your freedoms. We digress. We could keep going on the DSO. I will say this is a good opportunity. I mean, if you're a dentist out there thinking like you're faced with this or you're questioning this, like this is what we do. Huge part of what we do. We have these conversations all the time with dentists, helping navigate these big decisions. Super simple to set up a consultation, and we'd be happy to talk to you. You can go to dentistadvisors.com, where we'd be happy to talk to you about this and everything else going on with any of these topics that we're talking about. Next topic, 401ks. Jake, I want to get your take on 401ks. Where is the advisometer versus the dentometer?
I'm going to give my second 100% of the podcast. I think 401ks are underrated at this point. I think this stage of, investment cycle, capitalism, where we're at, as a tax strategy, 401ks are awesome. I love them. Most people I know want to save on taxes, and they know they need to plan for retirement and save and invest for retirement. A 401k does both of those for you at the same time. We talk with clients about tax strategy all the time, and people are wondering about what about this or what about this thing or that. The 401k is one of the only places that you can put your money, still hold on to it and keep it for the long run, and get a tax deduction for.
Yep.
Right. All of the other tax deductions are buy this car, or buy this piece of equipment, donate to a charity, give away your money, and then get a tax benefit. A 401k, you get to keep it and grow it and get the tax benefit. I'm all in. Love a 401k.
Love it. What would you say the dentometer is on this?
50%, 40%.
Yeah.
I think most people know, oh yeah, 401k, I need to contribute to that.
Yeah.
I know I need to do this, but it isn't super sexy. It is very known, right? It's like, oh yeah, I'll put my money away and grow it for retirement. Yay, type of thing. So I think people know they need to do it, but there's all these TikToks or different advice or brother-in-laws talking to you about, have you heard of this tax strategy or this thing there? And so as far as a tax strategy goes, I think it's pretty low for most dentists, but they just don't understand how awesome it is.
Yeah, agree. Chris, any thoughts on this one?
So not my area of expertise, other than the word that came to mind was, well, this is one of those unsexy topics we need to talk about. I'll say tax strategies are probably, high on 75%, 80% on the minds of dentists, but using this as one of the ways to have a tax advantage, I don't think they lean into that as much as they should.
Yeah, totally agree. The scoring Jake gave is exactly what I would give. 100% for our meter, 50% for dentists. Just to echo what you said, I think it's become so boring. It's kind of like the stock market as a whole too has become so boring for people that it just becomes like this thing of like, yeah, sure. Yeah. Okay. But like,
if I gotta.
Yeah, but it's such a powerful, underrated
awesome.
tool at this point. Not to mention what people are, all the TikTok crap going around of like 401k is a bad investment. That's kind of made this even more of an underrated tool for dentists to use. So it cannot be repeated enough, Jake, to what you said is 401ks and retirement accounts as a whole are the only deduction you can take and keep the money. The only deduction. So 401ks, IRAs, HSAs. Those are the three places you can deduct the money and actually keep it. That is huge. Cannot be overstated. Okay, moving on. Cryptocurrency. I was going to say just Bitcoin. Bitcoin's part of the overall umbrella of crypto.
Yeah.
Let's get Chris in here. I know this is not an area of expertise for you, Chris, but from your perspective,
give us your crypto takes. Yeah.
Give us your crypto take.
Gosh, Chris the advisor, Chris the consumer. Chris the consumer is like, I don't know what this stuff is.
No one does,
real?
Chris. No one
I'm
does.
like,
no one
okay.
does.
So, but then, it is a part of our family's investment portfolio. We do have some. And I know it's one of those, I'll say on the dentometer, it was a hot topic. I mean, several years ago, that's all I was hearing about was, did you buy? Did you not? Did you see what it's doing? And it's been less popular, at least in the conversations that I have with my clients who are friends, that it's like, that's not something that's come up as much anymore. So I think it's here to stay. I think it's something we do need to know about. I think it's probably, I'd give it a 7 out of 10 on the dentometer in terms of the interest level.
You're saying the dentometer, 70% of dentists are like into it, think it's important. Got it.
And are still asking, still are invested in it. And should I continue and how much should I be in it?
Yep. Jake, I'm going to let you go last on this one.
Yes, you go.
I will agree on the dentometer. I'd say it's softened for sure. It's less, people are less interested overall now than let's say 2021 when things were just out of control. I'd say 70-75% is probably still a good number for the dentometer. This is totally, I'm admitting this is a personal bias of mine as I say advisometer. 0%, like for me personally.
So the matometer.
The matometer,
crypto has. I'm there too. I was going to say 5%, but just,
okay.
Yeah,
there's zero place for crypto for me in my life or ever advocating for it in a dentist life. However, we have clients who push back and say, we want this. Great. Just let's build some guardrails around this. Like anything, if a dentist said, I'm going all in on NVIDIA or Bitcoin, or I don't care what it is, there's always going to be rules you want to follow. But for me personally, cryptos could not, I mean, as low as it gets on my meter as far as importance and placement in a portfolio. Jake, let's get you in here.
I'm with you. If people want to come at us, that's fine. I would welcome it. For the crypto fanatics out there. The hard thing about crypto for an advisor to recommend to a client to implement in your portfolio as any significant asset is it doesn't do anything. Okay? Like it is online currency.
Gold.
It does not provide services. It does not have like a board of CEOs. There's no tangible physical location. Like it does nothing. So like most of the time when you're investing in a company in the stock market, it's an actual company that provides goods or services and improves the world in some way, right? That's what you're investing in.
Yeah.
Crypto is not that. It is not based on anything. So it's hard to value it, right? Like crypto, like Bitcoin right now, as we're recording this, is around 70,000, right? Or so. Is that the right number? Who knows? There's no way to analyze this because it goes up and down based on the whims of what people think it should be worth. So yeah, it's just hard to really have as a serious big portion of your portfolio long term because we just don't know how to value it and we don't know how just to expect it to perform in the future. It's all just a crapshoot.
Yeah.
Well, you're making me feel better.
Can I bring in a sports analogy really quick and selfishly?
Well, it would not be our show without
one.
Wouldn't
be our show if we didn't bring in a sports analogy. But and selfishly, on the heels of the Super Bowl, and I admit a horribly disappointing season for the Eagles, but still going to bring in a defense of my guy Jalen Hurts. Jalen Hurts was getting a lot of crap this last year about his value and how good he actually was. And Jake, you and I had this discussion. The only argument against Jalen Hurts ever has always been a hypothetical. Well, if you traded him for X guy,
yes,
he wouldn't be as good. And as I said, the only argument is hypothetical. I think of the same thing with crypto. The only argument for it is completely hypothetical of what it could do at some point or the idea behind it. And look at Bitcoin. How many use cases have people spouted about? Oh, now it's this. Oh, now it's this. And none of it's ever come to fruition. Maybe we're just naive and not as, we don't have the foresight that all these
we're right. Like it could go up 200%, but even if it does, that's not based on anything. Like we just don't know. Like if it does, that's great. And if you're in it, you made money. And if you've been in it for the past 10 years, you've done really well and you've made a lot of money, but it's just hard. Like you can't analyze it as a serious investment really as part of your portfolio.
They're digital Labubus. That's what they are. Digital Labubus. You know what I'm saying?
Yeah.
Okay, moving on. Chris, I want to bring you in on this one from a practice business perspective, marketing. And we maybe want to get more nuanced here around maybe like giving the caveat of like strategic intentional marketing. But we could just keep it broad, like marketing in general. What is your business consultant meter when it comes to marketing for a dental practice?
That's a 90 for sure in terms of the importance of it. And again, the idea of understanding what marketing is the nuanced side of this. If I had a nickel, if I had a tenth of a Bitcoin for every 1/100th of the current Bitcoin of every doctor that said, I need more new patients, when really, do you? That's not necessarily the case. They're looking to increase productivity, increase revenue, so they're thinking they need more new patients. And again, that's not always the case. So marketing is necessary for any business in terms of bringing in new revenue, bringing in new patients, bringing in new clients, right? So that's necessary. It's highly competitive. It's highly specialized. It is something I say never go in there alone. Definitely getting advice on this. You are an excellent dentist. You're probably not an excellent online marketer. Neither am I, but I know enough to say get professional help with this. So I think it should be 90%, if not 100%. I think it is on the minds of dentists, 90 to 100%. And
you think that matches up as from a level of importance? Dentists think 90 to 100? Got it.
But again, I think the disconnect is what problem they're trying to solve with marketing. Yeah. And where they think the answers are is also very different. If you're just driving new patients coming in and not realizing that your system's in-house, like your phone's ringing off the hook and you can't close the call if you can't convert the call, then your marketing is working because all external marketing does is make the phone ring. But if you don't understand what's happening within your four walls, as we were saying, how the phone call is being answered, do you have places to put them in your schedule? What are you doing with those patients in terms of diagnostics and treatment planning and case acceptance? Are they staying in your practice? So back to, what problem is marketing solving? That's the real question versus is marketing important or not?
Yeah, love it. Jake?
I don't think I have anything to add. Again, Chris is the expert here. I think you did mention the other day, Chris, though, that gone are the days of just hanging a shingle and expecting patients to come in, right? We live in a more online society, and marketing probably is more important than it ever has been before of getting patients in the door. And so, yeah, I think, 90, 100%, put it all the way up there. really important to do.
Where they're at in their business cycle as a business all depends on what kind of marketing and how much. And would I say it needs to be a consistent budget? Yes. Would I say it needs to go up at different times during growth opportunities? You bet. And that is something that is an investment, not an expense when done well.
Done well. So there's a couple of new. I'm totally with you. And again, I'd rely on you, Jake, and I both would in this specific category of like how important this is. But you said something earlier around a private practice owner competing with the big groups, and one area that they're at a huge disadvantage a lot of times is marketing. They just don't have the budget or the money, right, to compete. So I think a lot of times this is one reason why dentists sometimes throw their hands up like, well, can't do it. I'm just not going to do it because they can't compete. I think that's a huge mistake. I think the other problem that dentists face that I've seen, Chris, is we talk about our industry as advisors, financial advisors, being this opaque, how do you even describe what an advisor does? Like, you talk to 10 different advisors, you're going to get 10 different answers, or they're going to say, I'm an advisor, but they just sell insurance, that kind of stuff. I think it's even worse with marketers. It's like, I do marketing. It's like, well, what does that mean? Do you just like do my SEO, or are you doing like story brand marketing? Like there's so many. So I've seen a lot of dentists have bad experiences because they're like, they hear this, like, okay, I got to do marketing. And they go find a marketer and start, and then it goes horribly. So I think there's a lot that goes into this, Chris, that you've already highlighted and you've talked a lot about. That yes, this is important, but and you should be investing in this and looking at it as an investment, but you got to get it right. Otherwise, you're going to be throwing a lot of money at crap that doesn't do anything.
Well, and that's the scary thing with marketing. Everything works, and at the same time, everything fails, depending on what business problem are you trying to solve? Who are you working with? Where is it breaking down? There's probably 8 different places in the life cycle or in the patient journey that I could say, hey, here's where your marketing is breaking down if you're not paying attention to it. So again, that idea of marketing makes the phone ring, and that advertising makes the phone ring. And it's different. Advertising can be different than marketing. Fred Joyle, two dozen years ago, said everything is marketing. It's a great book. So that is how you compete against other larger advertising budgets in the community, is what are you doing internally?
Yeah.
In your community, outreach, relationships, stories, all of that.
Yeah, things that the DSO might have more money behind, but they can't be as personalized as you. There's advantages that you have as an individual owner,
which can be marketed.
Huge. Okay, that's great. Okay, moving on. Back to the basics of boring financial planning. Auto saving into a brokerage account, specifically into a globally diversified portfolio of equities. That's a mouthful. But let's just go auto savings into a brokerage account. I'll start with this one. I'll give my advisometer 100%. I talk about underrated. As an advisor, I think building liquidity in a brokerage account is one of top 3, top 4, 5, whatever, most underrated things that dentists can do to get them to retirement readiness faster. And reduce their stress along the way as they see that portfolio growing. I would say a dentometer, if they're listeners of our show, if they're clients of ours, it's much higher. But I'd say the typical dentist out there, it's probably like 40%. I don't think, maybe even lower. I don't think a lot of dentists even think about this. But Jake, let's get you in here.
Yeah, for those who may be listening who are not sure what a brokerage account is, it's a regular investment account. And I wanted to talk about the brokerage account piece, like you just said here, Matt, so a brokerage account is just a regular investment account. There are no rules on putting money in. Everyone who's of age can put money into there. You can put $1 million a month into it if you want to. There are no rules on taking the money out. You can take the money out at any time. There are no penalties. You do have to pay capital gains tax on whatever gain is in there. But it's essentially just a flexible place to put your money to get it growing in the market without having stringent rules around it, like a 401k, IRA, Roth IRA, HSA, right? Things like that. I think it's underrated too, Matt. I think brokerage accounts are awesome, and maybe we don't talk about them enough. Even amongst our clients, like a brokerage account is a perfect place where if you have an emergency fund and money in your practice to cover overhead and you're set cash-wise, I think you should be moving kind of everything else left over into a brokerage account. You might as well get it growing with the market. You can still access it if you need to, If there are big projects or things coming up that you know are maybe coming in a couple of years, but you don't have a firm timeline for, it's like, let's might as well put this money into a brokerage account, get it invested, get it growing. We can always access it if we need to. I just think it's a really cool account. Utilized, I think people tend to hold more cash than they even need to. You can almost view a brokerage account as an emergency fund because we can access those funds almost immediately. Anyway, yeah, brokerage accounts are awesome. And part of the benefit of being an investor in 2025 is we can automate contributions, which is another big thing that we'd like to hit on.
Yep, out of sight, out of mind. Go ahead,
Set
Chris.
it and forget it.
Yes.
Yeah.
Huge.
One of those. So would I be correct or accurate to say this might be a high yield savings account?
So high yield savings account would be in the cash category. That is more on the still, I mean, it's kind of in this gray area of like, is it an investment account? It's not, but it's getting you better returns than, let's say, theoretically, and right now it is with rates, than it is like your checking account for sure. But it's separate than a brokerage account that would then be, those assets would be invested in, let's say, individual stocks, bonds, mutual fund,
ETF. High yield savings account's a money market. It's a guaranteed fixed rate of return, right, for your cash that you have. You're not investing it in the stock market.
I am using my brokerage account as a high yield savings.
Which you can do too. You can hold.
I am using it that way, that it's not a set account. I want it in there. I'm like, make more money with money I don't have to have my hands on right now for a couple of years. Easy withdrawal, a couple days to get it out kind of thing. I'm like, I'm all in.
That's step one. And where people get confused on this is step one is set up an automatic savings somewhere out of sight, out of mind, that's outside of your regular day-to-day checking account. Like that's step one. Step two is then invest it properly based on your timeline, your risk tolerance, your goals. And that's where I think sometimes, Chris, you're highlighting, dentists sometimes will get confused on is like, oh, well, I'm doing this. It's all, I have $2 million sitting here in my high yield savings account. It's like, well, and this isn't until retirement. I'm 45 years old. It's like, well, let's turn the dial up. Let's actually get that invested and grow this asset to get you, again, the ultimate goal, getting you to retirement readiness. So there's a difference for sure between a high yield savings account and a brokerage account and investing it there.
But that is a key point to make the difference of that, definitely putting it into an investment account that's going to be a better yield is, again, that set it and forget it idea of putting something away and knowing it's growing. That is what I think, again, one of these unsexy things that we talk about, and yet such a great tool.
Yep.
That if it's not a part of a conversation, definitely get a hold of your financial planner. Make
also
it
great for people who are looking to retire early. Right? You want to utilize different types of investment accounts. If you're like, I want to be done at 45 or 50 and you're on pace to do so, you can't access 401k or Roth funds or things until you're 59 and a half, until you're 60. A brokerage account is a way to give you more flexibility, more liquidity at different stages of your life. So
yeah, an insurance salesman will sit out there and try to tell you about being your own bank, and they try to tell you that a whole life policy is the only way to do it. But a little nuance here, brokerage accounts are an excellent way to be your own bank. And this is what the super wealthy do. They build up a ton of assets in things like a brokerage account, liquid assets that are invested. They set up what's called an S block, security-backed line of credit. It's literally being your own bank. You can take money out of that tax-free and use that. There's obviously a rate attached to it, like any line of credit, but there's a lot of advantages to something like a brokerage account that doesn't feel sexy at all. And certainly when we're like globally diversified portfolio, long-term growth, like it doesn't feel sexy, but they are an incredible tool to use for dentists who are making a lot of money and have the ability to put away a lot of money. So 100% on the advisometer. All right, moving forward. Next topic. And my guess is we will maybe have to do a part 2 of this. We have a lot more left. Budgeting. So we can talk about personal budgeting and then also maybe budgeting in the practice. Let's start with budgeting on the personal finance side. Jake, what are your thoughts on this?
Budgeting can mean a lot of different things to different people, and there's different ways to do budgeting. In general, budgeting is fantastic, about 90%, I would say, for this. I mean, you could argue for 100. I'll make the case for why there's maybe a 10% buffer, but 90% at least, budgeting is very how
you're saying advisometer.
Advisometer, 90%. Yeah.
Let's get nuanced here. What do you do? Yeah. What do you define as budgeting? How do you look at budgeting?
Well, I would look at it as from the base level as tracking more than anything, which we talked about in our first one, at least knowing where your money is going. I think traditional sense, we think of budgeting as like, I'm going to have these different envelopes or different buckets for different things. Here's my food bucket. Here's my laundry bucket. Here's my house. And I kind of, before the month starts, I kind of allocate to all these buckets. What I would really think is important to do is just track more than anything, like know where your money's going. First of all, like how much is going towards debt payments, how much is going towards spending or housing, how much is, how much are you saving, how much is going towards taxes, all of those things there. I'm less of a believer in getting really granular buckets for everything. Like, I don't think that's absolutely necessary. For example, like we are big believers in set a really aggressive savings rate, talking to our last point of automation, putting money in brokerage account. If you can be aggressive, put away 15, 20, 25% of your income consistently every month, I'm of the opinion that you can kind of do whatever you want with whatever's left over. Right? Like you don't need a super specific budget with the funds left over. You're already taking care of your future self with your savings rate. Go crazy with kind of the rest of it. Now, some people really do love budgeting and it helps them just keep their spending in check. If you do have a spending problem and that's an issue, that's when a budget can really come into play, when you break down exactly all the different categories on the personal spending side. But in general, 90%, awesome. I think on the dentometer, I think it's one of those like, people know it's important and they should be doing it. Very few people actually are doing it because it is tedious and hard. So like 40, 50%, is kind of what I'd say on the dentometer there.
Yeah. Chris, let's get you in here and maybe have more of a tilt on the practice side.
I'm with Jake though on the personal side too. I don't think it's as aware as it probably should be. And I think that's it, the awareness, the number one of spending. So the history, if you're tracking that for a while and knowing where it's going. But I am of the big bucket that if I have X amount, I can spend it how I want, as long as I put my money aside for the savings and investing and taxes, that sort of thing, debt. So knowing my spend bucket, I can do whatever I want with my spend bucket kind of thing. Once I know what my trends are and my averages are. So that I think I'm very aligned with Jake on that. From the budgeting on the dental side, this I think has a little more need to be observed, managed, and budgeted for. So there are healthy benchmarks that we do help doctors work within from the different categories of spending. I think it's also impactful to know that when I spend more on one side, it's going to positively impact something else. For example, if I invest more in marketing and increase my revenue, my fixed expenses on facility go down because my production goes up. My percentages on team goes down because I've increased my productivity. So I think the impact of spending on the overhead overall profitability is where it's really fascinating. So I do think keeping a tighter eye on that, knowing the benchmarks for that, and working within that framework is necessary, again, to feed and create more on the spending side personally.
Love it. I got nothing to add. You guys said it all.
Mic drop.
It's perfect. Okay, moving on. Doing your own accounting, tax, and bookkeeping work as a dentist. This one's easy for me, and I'll throw it to you guys. On the advisometer, 0%. If you are a practice owner, do not be doing your own accounting, tax, or bookkeeping. There's so many more things you could be spending your time, energy, and focus on. This is a 0% for me from an advisor perspective. On the denometer, it's like 50%, maybe ish. I think there's a lot, maybe it's less, but I think there's actually quite a few dentists out there that think they're like saving money.
Yeah, mainly young practice owners who are trying to save some money, which is understandable.
Sure, I get it. I totally get it. But are you actually saving money? And I agree with you. It's usually on the younger side because it takes time for you to for dentists to realize how valuable their time is and the opportunity cost of that trade-off of like, if I'm doing my own tax accounting and bookkeeping to save whatever, a couple $100 a month, $1,000 a month, whatever it is, I'm spending the time to do that. Where else could I be spending my time? That takes some time usually for dentists to kind of like wrap their mind around. I don't blame them, but just saying this is a 0%. You should be outsourcing this as quickly as you possibly can. I'll give it to you guys. Chris, any thoughts on this one?
You had me at opportunity cost. That's exactly what it comes down to is no one else can do certain things that you do. Delegate everything else. I'll take that outside of, get somebody to help you with marketing, get somebody to help you, chair side when you can.
Build your team.
Delegate to things that you can, anything you can delegate, do it because the opportunity costs within your own two hands as a dentist are immeasurable.
Yeah. Jake?
Nothing to add. You guys are on top of it.
Love it. Moving on. Okay, this kind of goes. Maybe we skip a couple of these here. This one will be quick, I think. Picking individual stocks. Jake. Advisometer.
Advisometer. I like that we've come up with this term. 70. I mean, no, advisometer. It would be. I was thinking about it the wrong way. 30%. Is that surprising to you, Matt? I'm not against picking individual stocks. I guess like my baseline theory about investing is there's no one right way to do it, honestly,
Sure.
right? There's a million different ways to invest. Obviously, there are ways that are more proven to be more successful over time. Individual investing typically is not that way, right? There are triple PhDs on Wall Street who like do this 9 to 5 for decades and try and pick and choose the best stocks that are going to outperform the market. Yes, they like this is their whole life, and the smartest people on planet Earth, right, dedicated to doing this. And study after study shows, Robbie here,
the professor,
that 95% of those professional money managers do not outperform the overall market over just a 5-year period, right? It's like really hard to do, to sustain for over time. So it is like in the long run, it is a losing game. History and research has shown us it's a losing game to try and pick stocks over the course of a career. Can you be successful at doing it in the short term, maybe for a few years in a row, type of thing like that? Sure. Again, but that's not how you build wealth. You build wealth over decades, and it's just really hard to keep up over the long run. So we believe, I guess, like as a firm, buying, like back to our previous point, we want to own more of a globally diversified portfolio, take what the market can give you, have good behavior, like compound and just work in your favor. But I'm not opposed to some people saying, I just want to have a small section of my portfolio that I want to try and get some more returns and maybe buy some NVIDIA or buy some Tesla or MicroStrategy or whatever type of word you want to use. And they get some enjoyment out of it, and I'm okay with that. And so I would say 30%, I guess, on the advisometer. I think there's a time and a place for certain picking stocks, especially if like you've already built the backbone of good market-based returns and you have enough money and you're kind of financially independent and you want to do some of it for fun. I don't know. I think there's nuance in this. I'm blabbing here.
No, I think
anyway.
I think you're totally. So can I jump in here, Chris?
Yes, please.
So it is higher than I would have expected, but I think you add some good caveats there. I have told many dentists this, many clients this, that if you have an itch that needs to be scratched, if you're like, I need to do this because it's just, for whatever reason, it's fun, or you just know that like, I'm going to get on TikTok or Instagram, or I'm going to talk to my buddies at the water cooler and like, I'm going to act on this. If the way to keep your core portfolio invested and not mess with it is by having this little game account for you, I'm all for it. Do it all day long. Just know, Jake, you already highlighted, the probabilities of success go way down, especially as a dentist. Let's just be honest, because you just don't have the time or energy or the.
But that's the funny thing is, even by putting in more time does not mean that you're going to have more success.
That's what bothers me. It's like, where's this time coming from? If it's 2:00 and you're checking the stocks, I'm like, why aren't you checking hygiene?
That is a problem.
Well, so that's maybe it. That's maybe it, is that the time spent, we talk about opportunity cost, the time spent and ROI on time invested is far and away better on your skill set and your business than it ever will be on your stock portfolio. Where I struggle with this is the behavioral side. So one of the greatest, there's a famous saying, one of the greatest tricks that Wall Street ever pulled is making you think luck is skill. And the problem with the last couple of years has been that a lot of dentists think they're skilled. Because, and not just dentists, everybody thinks they're skilled at investing. One day, at some point, that's going to come back to fruition of saying like, oh, maybe that wasn't so skilled. So my problem with picking individual stocks, it is, it increases the odds of you thinking you're more skilled than you are as an investor. And it increases the odds of blowing yourself up when you start to believe that. And so that's where I struggle. And especially if you're treating this like a casino and you're trading stocks as opposed to long-term buy and hold investing with individual stocks. So to your point, Jake, there's definitely some nuance there for sure. I would give this a lower score for most dentists. I'd probably put this at like 10, 15%. From an advisor perspective, I would more people than not should not be messing with individual stocks, in my opinion.
And if they do, it's this much, right? It's that small amount. I loved it in addition to my long-term strategy kind of thing.
Yep.
Hey, I just got a bonus and it's an extra $1,000. Go play with that.
Yep.
But not during work time.
So
if that's what you like doing, yeah, but there's an argument to me too of like, if your investments are taking away valuable time, not even from your practice, but maybe from just enjoying life,
hobbies,
right? Like
kids,
hobbies, or
family,
like
friends.
like if you're at the beach with your family and you're checking your investment portfolio on Robinhood because you're wondering how the market's doing, it's like, that's probably like, you can invest this in a way where it doesn't have to take too much mental capital for you, is also one of the benefits of not picking stocks.
Yep.
Anyway, yeah.
Yeah, love it.
Mental capital. I got to write that down.
Yeah, that's a good one. Okay, we're going to go broad on this one, tax secrets. So things like R&D tax credit. We just talked about this morning in a meeting. Conservation easements, opportunity zones. Are there more coming to mind for you, Jake, from the tax secret side? Putting your car on your the business and buying up a bunch of stuff at the end of the year, just chasing tax deductions. Yeah, 179. I mean,
just rental properties.
There's some things that are legitimate. Yeah, short-term tax loophole, this kind of stuff. Tax secrets is a broad category. Jake, let's start with you. What's the advisometer on this topic of level of importance?
I want to say 0%. Maybe that's a bit aggressive. 15-20%. I would just say this. And like, as far as like the dentometer, this is like 100%. I mean, I can't even tell you.
Off the charts. Yeah.
It is just like every conversation is, how can I pay less tax? Which I get. I understand the want and the need to pay less taxes. I would just say this, when looking for an accountant in general, like, there are no tax secrets really, especially in today's day and age. Like, we all know the tax code. Every accountant knows the tax code. You're not hiring someone for advice like, how does he know the top super secret things that my other accountant didn't know about that he's going to get deductions for me? That's not really it. And so I actually like to encourage people when they're looking for an accountant or someone to do their taxes, it's far less about that, almost nothing about that, and far more about like organization and responsiveness and communication and customer service and getting things done on time. Like, that's what you should be looking for with your accountant, because there's not these secret accountants out there who are just saving people hundreds of thousands in taxes because they know the secret and other people don't.
Yeah. Chris, I want to get you in here. Any thoughts from your side?
Get help. This again, I think it's obviously people are asking about it, and anybody that is bringing in a lot of revenue. Again, if I got, for every time I helped a client grow and got yelled at by the accountant, well, great, they've got more taxes. I'm like, I'm sorry, they're making more money.
Yeah.
So I understand, it's a part of business growth that there are taxes, and anything I can do to reduce them is something that is important to any business owner, but it is beyond any individual. You've got to get help. And again, I'm a pretty straight shooter, so
yeah,
I don't bend too many rules.
Well, and I'm with you, Jake. We come across this all the time. You're right. Dentometer, it's off the charts. There's a huge difference between these tax secrets that don't exist and like actual strategy. And we're not downplaying strategy and planning. Like, there are things we talked about the 401k earlier. Like, there are things that you should be doing. There's a checklist of things that most practice owners should be focused on. It's just that when we go beyond those things that feel boring, and when they hear like tax planning, they immediately think, well, you're going to have something that like no one else knows about. And that's just not the case. And anyone who's telling you that is usually lying to you or trying to sell you something. So yeah, I'm with you. There are no tax secrets.
And there's a limited number of things, right, in like the dental profession that you can take advantage of. Maybe there are like R&D tax credits and things that other industries can take advantage of that don't really apply to dentists in your unique profession. And so,
even the work to get those credits can be, again, the lost opportunity, right?
Yep.
And this is where the tax planning comes in too, where like when we talk about tax planning, it's less of here's the things, like there are a list of things you can and maybe should be doing, but then it's like, should you be doing those things? Or like, should we be putting kids on payroll and paying a lot of money? Well, if you don't have a lot of cash in the practice and we're looking at buying a piece of equipment, maybe your money is best used there instead of doing the kids on payroll type of thing. Or if you want to buy a truck at the end of the year, donate to charity, whatever that looks like, there are other options. Like maybe your money's best used elsewhere instead of trying to maximize your tax reduction, your tax refund or whatever. And so that's what I like to call tax planning. It's not just what should you be utilizing, but even if you should be looking at these things this year, does it even make sense for you?
Yeah.
See, that's what I'm saying. Get professional help.
Yes. Love it. Well, guys, we're powering through. Next topic, owning your practice building. Chris,
I love this one.
Okay.
I would say 100% it should be, if it's possible, that it should be on the doctor's mind. And I can imagine as an advisometer, I think it's a great advantage. I recommend it when I'm talking to clients to 100%. If it's a possibility, they
so
can
many
do that.
questions about real estate, and my first response is, hey, like, is there an opportunity to buy your practice building? I honestly think that's like the first place you should look. That's like a 99% success rate. It feels like you're already in the building, especially in different building types come into play here. Like if it's a standalone building is mainly what we're talking about here, like part of a bigger complex and whatnot. But you're already in the building day to day. Like you're not essentially adding landlord duties. You have to pay rent at least every month. So you might as well switch that to equity if you can. For most buildings, it does make sense. I just think it's a great place to put your money. Again, you have to pay rent anyway. Most of the time works out because you're already in there using the space. You're wanting to keep it nice as possible. I'm a fan, 100%.
Especially if you're looking to grow too. That buying a facility to grow into is another great investment.
I'm a fan with the caveat that this should always be led by the business, like what's better for the business than it is just to own real estate. And I think where these can go wrong is dentists at the expense of their business switching locations, let's say, and getting a worse location in a worse area with less parking and all this stuff. Just because
or too big of a building. We see that sometimes, Matt, where it's like, I want to expand and I'm buying a $4 million building for my practice. And that's a whole different beast.
And then you become a landlord, right? The dentist,
landlocked.
The dentist is like, I'm going to go buy this big commercial building and I'm going to rent this part of it, but then I have 5 tenants and
that's a different
where
business.
It gets a little tricky. Exactly. But all else being equal, I agree with you guys. If you want to get into real estate, let's start with the business or the practice real estate first and see if that makes sense. Just again, not at the expense of
not a necessity. I have a lot of people ask if like we have to.
Yeah.
Not a necessity. Not a necessity. And this whole notion that like I'm renting, so I'm throwing money out the down the toilet, that is the most overused, ridiculous term. It is just not accurate. You are paying just as if you owned the building, different mechanisms, but you're paying just like a home. If you're renting a home, you're paying to live somewhere, have a roof over your head. There's different ways to do it, but it's not throwing money down the toilet. It's just a different mechanism.
Yeah, that rent payment allows you to collect all the money that you're collecting. It allows you to have your $1.5 million business.
Exactly.
By paying
Exactly right.
Part of doing business. Yeah.
Part of doing business. So, okay, let's see.
Let's just hit all of these. Do we just go rapid fire, Matt, and just have a long podcast?
We're gonna do it. Backdoor Roth conversions, rapid fire. Jake, hit it.
Incredible. Yes. There's kind of a lot of nuances to this that we don't need to get into, like in the weeds, can you or can you not type of deal. But backdoor Roth conversions are awesome. Most dentists should be taking advantage of this. Again, there's situations where you may have IRAs or different things, pre-tax money where you can't do rollovers, whatnot. But in general, 100%, this is great.
Yep. Totally agree.
What he said.
Yeah, couldn't agree more. 100%.
Yes, please. Next.
If possible, 100% on the advisometer for sure. All right, next topic. This is bigger, but we'll go quick. The idea of FIRE, financial independence, retire early. The idea of a dentist being like, I need to get done. Like the 35-year-old that's like, I want to retire in 10 years. Chris, let's start with you.
No.
Any thoughts on the advisometer side?
Don't start with me.
Oh, don't start with you. Okay, we don't have to.
Oh, I don't see it being. Walk me through this a little bit more. Tell me a little bit more what you mean by financial independent retire early. So is this because I'm going to flip my business and buy another one?
So this is
I'm going to work super hard.
This is more broad than that. So this is a movement in the financial kind of world. It took hold, I don't know how long ago. It got really popular. I'm going to say about 10, 15 years ago ish. Like a huge movement of like, I'm going to save every single dollar I can save. I'm going to live off rice and beans and cut every expense I possibly could cut to be financially independent as early in life as I possibly
40.
can.
Yeah, it's not going to be done at 40.
Is this a generational movement?
I think it's a big Gen X thing, honestly, Chris.
Okay,
Gen X, I think it's a big deal.
So not being one, I don't relate to this. Call me a boomer. Go ahead. Okay. It's kind of a tough way to live for 15 years. Yeah. Is it healthy?
Jake nailed it.
Okay.
Jake
Did he just say
it.
no?
He just said it's lame.
It's kind of like the whole thing of like, I am going to not get any coffee for 15 years so I can at some point down the road splurge and get myself coffee, right? Type of thing. Where it's like I'm taking away all the things that I enjoy right now for 10 or 15 years or whatever, just to hopefully enjoy those things down the road. I think that
I
doesn't
hope
make a
nothing
ton of
happens
sense
to
to me.
them.
Yeah, I think it's a lot of people are just very unsatisfied with work and going into work, which I think sometimes can happen with dentists where they become disenfranchised with the industry and things like this isn't super fun to me. And they're like, I just want to be done and get out of the rat race type of deal. But in general, I just don't think it works a lot too logistically. There's a lot of issues with it, like building a portfolio to last you 60 plus years type of things like that, 70 years, the loss of purpose by not working, really restricting expenses and lifestyle. I just think there's a lot of issues.
Yeah, the
with
loss of life while you are working.
Yes, exactly.
Just as much as the other way around.
Yeah.
Okay, yeah, me too. Not doing
I'm
it.
with you. I think this is one of the most most overrated concepts in finance.
Yeah.
Everything you just said, Jake. I think this ends in disaster for most people more than anything. I understand it. I really do. I understand that this can serve as a proxy for purpose for people of like, I don't know what I even want out of my life. So I'm just going to say like it's an easy goal to have and to articulate to be like, I'm going to retire. Like, I think a lot of like super type A people, this fits really well personality wise of like, here's a very specific goal that I can achieve. But I would dare say most people, even if they do achieve it, it ends up being such a far and away disappointment at some point that they're like, wow, this is actually not that cool. I would dare say most people have that disappointment with something like this. So I'm with you. I would give this we're all about retirement readiness and making work optional, all about it, but there being balance over burnout type of approach to this type of thing as well.
Yeah. Life, full life, rich life, life now, cash flow now, retirement later, all of that seems much more logical, achievable, doable, and enjoyable than suffering for 15. Suffering, there doesn't need to be suffering. And you can still have financial readiness, retirement readiness at a fair and manageable time.
Totally agree. We didn't give a score to that, but we're going to say, I think we're all saying Advisometer. We're going to give it a 0, 10, 15. I don't know. All right, moving on. Whole life insurance. Jake, rapid fire.
0%. There are very few black and white, like in the personal finance space, very few black and white, like you should do this, you shouldn't do this type of decisions and things. If there is one, whole life insurance is as close as it gets, I honestly think. It is just a general no for me. The exceptions are so few and far between that it's a no. Not great.
I'll give one exception that's come up personally for me and with a couple of clients of mine. Not buying it up front, but most term policies. Oh, I guess really quick definition. We've talked about this before, but if just to refresh, life insurance, you're either doing term or permanent. Term insurance, you have a certain term, amount of time you're going to be paying premiums, 10, 15, 20, 30 years. Once that term is over, you no longer pay premiums and the death benefit goes away. Permanent is, as it states, permanent. You're paying, usually building up some type of cash value. They're usually quite expensive, but the death benefit goes for your whole life. Most term policies have a convertible, like ability to convert. I've had a couple of cases come up recently with clients with health issues that they cannot get additional life insurance, and their situation would we do want to make sure they keep that in place. And so we've talked about converting it. But I've done this for almost 15 years. I can literally think of maybe 2 or 3 situations that I've even brought that conversation up. So to your point, Jake, it is really rare that we think a whole life insurance policy and the way it's sold is the problem, that it's some magical thing. That's a 0% for sure. Any way that it's sold, come talk to us. We will debunk all of them. So, Chris, I don't know if you have anything to add on this one.
Not a one.
Okay, moving on.
Yep.
But you will on this one, disability insurance, specifically on the business side, business interruption insurance or a business overhead policy. Let's talk about that one for a sec.
I think for solo practitioners, this is a very important topic to address. I think it should be at 80% on their mind. I think as an advisor, it's something I bring up a lot, one or both of those. and it needs to be addressed. Life happens. Depending on, I'm thinking about those actuarials. What do you do for fun? If you swim with sharks, you're going to need, some protection against that. So I think it is a risk mitigation policy that needs to be addressed and is not talked about enough. It's not inexpensive. No insurance really is inexpensive. But the minute you need it, you're much happier that you have it.
Yep.
And I have recommended it to most clients.
Sneakily, one of the most physical professions out there, right? And you just have to have it, have to have disability insurance. It isn't cheap, like Chris said. Sorry, just comes with the territory of being a dentist. You need it. The general rule of thumb is get enough disability, at least on the personal side, to cover personal living expenses, right? Is an easy way to think about how much coverage you need. If you spend 10 grand a month, about a $10,000 policy, it's going to make sense for you.
Yep. Yeah. Nothing to add there. I think it's 100%. If you can from the advisometer, you need it for sure. Especially, Chris, to your point, if you're a single producer,
solo
practitioner, you're going to need some type of risk mitigation there. So big. Okay, two more here. Rental properties. We kind of alluded to it on the short-term rental loophole and the tax secrets, but just rental properties in general. Thoughts on this?
60% advisometer, 65, 70%.
Ooh,
somewhere
higher than
range.
I thought you would give it.
Mainly for if this is your personality, kind of goes back to, we would recommend this more than individual stock picking, but we have a lot of clients who like rental properties. Real estate is something, as humans, I don't know why this is. We love rental properties. We love real estate. The tangible something of it just stirs something deep within our bosoms. We love it. We love the idea of the income coming in, right, every single month. We stay awake at night just dreaming of some rental income, apparently. Not a bad thing at all. Real estate is a great place to park your money to grow your wealth over time. It is a long-term investment. What I would debunk for most people is it's not a place to put your money and you're going to be making $3,000 a month in just passive income, no work on your end immediately. That is a myth. But if you are the type of personality who's okay being a landlord and you want to invest in a property that you feel like is going to be around for a long time, and it kind of fits well within your practice and your other investments, go for it. Let's have a conversation about it.
Chris, anything you want to add to that?
Again, balancing the portfolio, real estate is part of that. I will say passive is a false term.
Yes.
So thinking that this is not going to take any time. So I'm going back to, what are you doing with your time, right? If this is affecting you, is it stressing you? Is it worth, because it's not a set it and forget it like many other investments are.
Yeah. Passive income, along with FIRE, one of the most overrated, misused terms in finance for sure. Passive income, I think, is number one most misunderstood, phrases that people use. So I totally agree. I'm with you, Jake. I guess the one thing I always remind people of is, like any asset class, Jake, you said it earlier. There's no one way to invest or build wealth. There is no one way. So I acknowledge that. I think more times than not, this trips people up, trips dentists up, because they think it's something that it's actually not. With rental properties as a whole. The biggest reminder here is that building wealth takes time. Any of these investments, any of these asset classes, it's a grind. It's a mental, emotional grind because it takes a long time, whether that be in the public markets, whether that be building your practice in the private, market, or whether it be real estate. And I think for whatever reason, whatever that's stirring deep in our bosoms, Jake, as you mentioned, people think real estate is some fast track.
No,
and it just isn't. It
Nope.
just isn't. So if you're willing to have that personality to be a landlord for the next multiple decades,
it'll take you 15 years before you start seeing a consistent money coming in. I
or
feel
longer.
pretty comfortable saying, or longer.
Well, and
Or
who knows
longer.
what the rates are going to do over time too,
Yep.
right?
Mhm.
So
Yep. All right, last one. Should have started with this one. The Dentist Money Summit. Go ahead. We'll start with Chris. Dentist Money Summit. What's the advisometer?
Advisometer, 100% must be there. And again, I would advise any dentist, if you're not thinking about a great place to go to get CE and meet the people that you've only seen on Zoom for years and really have some great camaraderie and a little bit of fun along the way, top of my list.
Yeah. Jake?
100%. Nothing to add to what Chris said. That's awesome.
Every night I put my kids to bed and we have a routine. And as I'm going to shut the door, they yell to me, Dad, and they have to go through this list of like, I love you to Jupiter, to the moon, around at infinity times and back. It's the cutest thing ever. That is how much I think this is on the charts of coming to the Dentist Money Summit.
Aww.
And then some is how much my kids say they love me at night.
Now that just touched me deep within my soul there,
Yeah.
man, within our bosom.
But honestly, we would love to have you there. It's going to be a great time. Practice on your terms is the theme this year. A whole slate of new speakers. The professor himself, Robbie Demotchke, is going to be speaking, which is going to be great. If you want more, DennisMoneySummit.com. We would love to have you. Guys, we covered a ton. That was a jam-packed episode.
Amazing session here in
Amazing.
studio.
If you're still listening, you're one of the cool ones. And hopefully you got a lot of value out of this. Jake, Christine, thanks so much for being here. Everyone, thanks for listening. Until next time, take care. Bye-bye.
Bye, everybody.